Welcome back. We have with us the management of Lemon Tree Hotels. It's been a strong run for the hotel businesses that continued this time around, and Lemon Tree was no different. In fact, it reported their highest ever quarterly revenue, EBITDA. On all matrices, we saw a big jump in their performance. Patanjali Keswani, who's the CMD, joins in now. Thanks a lot, Mr. Keswani, for joining in. FY23 rather, was a breakout year for the industry. Everyone discovered newer areas of revenue, newer ways of cutting down on costs, and higher occupancy with a higher demand for hotel rooms meant great performance for everyone. You in particular as well. In fact, I remember FY17, you did profits of roughly 49 crores, and one quarter, the last quarter, you've done profits of 59 crores itself. So things have looked good, things have looked extremely strong, and we've seen that in the way the share price has moved as well. The question now is that, is it getting tired at the top? I mean, you know, if I look at your occupancy for the quarter, it was a little over 75%. But at the same time, if you break it down, Jan was 73%, Feb was 80%, March it came down to 68%. Can you explain to us what happened, and is this sustainable in the first quarter and FY24?
Good afternoon, Mangalam. Well, if you ask me, it's not sustainable. It'll in fact increase the occupancy because when you look at a quarter, remember that each month has a different demand-supply dynamic. So focusing purely on demand, typically in March of every year, for all hotels, there is a drop in demand because it's the year end and people do not travel so much, typically in the last 2 weeks. In addition, in March this year, you have, in our case, we have a very large inventory in South India, and you had the Ugadi festival. So that affected about 30% of our inventory, mostly in Bangalore, Hyderabad, and Chennai, which is why, as we normally have every year, in March, a lower occupancy than February. So, you know, each month is different. You have to understand that in January, the business is muted in the first 2 weeks of January because nobody wants to travel. It's post-New Year's. So peak season is mid-January to mid-March. So really, you capture 2 months out of 3. And to answer your question, I may be tired, but I don't think demand is tired.
Okay, well, that's a good way to put it. I mean, demand is not tired at all. You go out there and it's really hard to even get bookings these days. Forget about, you know, looking at what the rates are. Those are astronomical in any case. But you're saying occupancy will increase from these levels. Just going by the trend, right? I mean, on an average, what do you think a sustainable occupancy will be? You've been between this range of 70 to 80% on an average. Is this the level that you can hold? And what does this mean in terms of profitability?
So, see, profitability is a function, really, Sonia, not only of occupancy, but the rate that you get. So our rate has gone up significantly from pre-COVID. So really, post-COVID, we decided that we would revise, and we reviewed, and then we said we would revise our pricing, and we did it by about 20%. In fact, overall, on a pre to post-COVID basis, our pricing is up about 30%. But that's not really so much because that's 3 years and there has been significant inflation. So the bottom line is at current pricing levels and current occupancy levels, I typically expect a return of capital, at least on the deployed capital of Lemon Tree, of about 15-16%. And I am very sure that within the next year, it will increase to about 20 to 22% in terms of return on capital, which means that pricing will go up and occupancy will go up.
All right. So that's about the pricing and occupancy. Just wanted to understand a little on your FY24 guidance itself, because I remember the previous conversations that we would have, you would talk about 20% growth in FY24, but now you've become a little, you don't want to provide specific guidance with regards to growth expectations on the top line and bottom line in FY24. What makes you circumspect? Could you give us a range, ballpark range that we're looking at? And margins, mainly because you will renovate a couple of properties in the Keys portfolio too.
So we will really renovate about 60 hotels, 50 to 60 hotels. Not completely, but say 1/3 each. So when you look at it from an inventory basis, we will renovate about 20% of all our hotel rooms. So that will obviously, we expect to complete that by the end of H1. so that we can capture pricing and demand in H2. The reason I am circumspect is because there is a lot of, one thing that you have to understand in our business, and it is an interesting part of our business, it is that if you look at any hotel company, any hotel in India, 4 months out, the demand on its books, the book demand is very low. It is 1 or 2 or 3%. So there is a booking window within which demand comes. And interestingly, because of the general uncertainties and so on and so forth, the booking window has shrunk in India in the last 5 years. So, if I do any forecasting, it is obviously based on current demand for a future date. And this shrinkage of the window is what is affecting our ability to forecast. Then there is the overall macro. So, the war in Ukraine, interest rates, inflation, and so on and so forth. Sure. So I don't want to give guidance, but really what I want to say is that we will grow. Our momentum will continue. And our will increase. That's all.
What do you mean when you say momentum? Because, last year, of course, was an aberration. You grew 2x in revenue and, your margins were upwards of 50% as well. So what exactly do you mean momentum? Is it the last 3-year CAGR, 5-year CAGR? Should we look at, 3-year CAGR plus? Just wanted to understand that.
Are you an editor or are you an analyst? That's a question an analyst would ask.
An analyst editor, if you can.
Okay. So the way I look at it is there is, when I say momentum, I'm not taking any specific trend line. All I'm saying is that when things settle, the dust settles, when you reprice, you lose some demand. The bottom part of your pricing, because your pricing is in a bell curve. So when you increase pricing, obviously a bunch of customers who were using you at the bottom quartile of your pricing may find you unaffordable. So the whole thing is when you reprice, you are really looking to replace that bottom quartile. So there is a catch-up factor. So what I really said in my last few conversations, including with you, was that we would reprice, we would lose some demand, and then we would look to replace it. So really what you're seeing in Q4 is a replacement, and we've come back to about mid-70s. Now the question is, how much do we reprice and how much do we replace this year? So to answer, instead of giving you a long-winded answer, let me just say, we are very confident we will increase our occupancy and our average rates and maintain our price structure in this coming year, which means basically an expansion in margin and an absolute expansion in the amount of EBITDA we generate.
Okay, so, that doesn't bode too well for people like us who are perhaps going to, come and stay at your hotels at some point, right? You said that average room rates are 30% higher than what it was pre-COVID levels. And now you're saying there is scope to increase it further. When is this going to stop? And
I will ask, sorry. Sonia, what's the favorite thing you buy in consumer discretionary? Have you looked at the pricing 4 years ago and today? Are you saying it remained flat? Surely it went up by 20-30% over a 4-year period. Why are you depriving a poor industry like ours of a 30% hike?
Well, by no means are you poor.
By no means are you poor, and by no means are you guys deprived. This is like a boom period, something we haven't seen in a while.
No, the boom period will be next year and the following year. If you ain't seen nothing yet, let me tell you that, as far as...
We take that point, all right. When you are booming ahead, we only wish for further boom to be, in the next year, and may always the best year be ahead of you and not behind you. Thank you, Mr. Keswani, for joining in, and we will continue our conversation through the quarter as well. But Sonia, Maruti numbers, exports are down 2.6%.